Hi, everybody. Wow. Huh? Guys
Morning
wanted
there.
some action. Hey, Kman, you wanted some action. Paul Hudson, Richard. How you doing, Mary? Sinatra. It seems like everyone's doing okay. All right, so let me get rid of this. Of course, everyone knows what we're going to start with, right? Take a guess.
Turkish lira?
The Polish zlotny. There it is. Okay, you see the end?
Yes, we do.
Okay, so early in the week, I talked about the potential of having an inside week, just like the euro did a couple weeks ago, had this inside week and then reversed, the inverse of it here. Talked about that we had to clean out the double top, which it did while I was snoring, and pretty decisive day. And
Decisive
like I said,
action, decisive people.
yeah, decisive week. Kind of, looks like it was a 3. And just the only other thing I want to talk about before I get to everyone else's impressions is left yesterday saying I like TLT, and it's putting in a reversal week as well. And what was interesting about TLT is that after the Fed, when everything sold off, TLT put in a higher low and, putting in a nice week. So if this is a top, then the bonds have bottomed and it's probably just beginning. I don't think these are one-day wonders. Even Jeff Gunlich was on after the Fed and he said, a day where you see the short end of the curve still up by 5, 6, 7 bips and the bonds yields drop, big recessionary signal, and that the bonds could be a pretty good alternative in this environment. So Gunlich must be watching F.A.C.E. That's all I could say. And okay, guys, so were you up for all the action came in? Did you stay up? Okay, I figured you'd probably would drink some Red Bull and trade this thing up there. So give us a play-by-play on the action in yen.
I need some Red Bull by now.
Yeah, look at that.
Bank of Japan. So yeah. So first of all, Corona went like, okay, I don't change anything, and then dollar yen rallied up to the highs, and from then on, Ministry of Finance said, okay, this it's enough. We had a few warnings, and then finally they decided to intervene, and I think they did about 3, possibly 4 rounds, at least 3 of what I could count, at least. 3 rounds, put it down to close to 140.5. Then we had a bounce back up to 143, and now we are back here at 141. And
how about the size of their interventions? You've seen them before, right?
Yes.
So there's magnitude of, how much they throw at it. Do they throw a lot at it?
So they haven't told us. They won't. We will not know exactly until the end of the month. But there are smart people apparently who have tried to calculate it, and they said they'd thrown about 1% of their reserves at it, which would equate to about $12–13 billion, which is not unthinkable, but it's just wild guesses, right? So
yeah.
And that's allow me. I was going to say good morning, Kman. That was from that Amir was reporting that from Bloomberg. So
yes, exactly.
Yeah, and in our chat room, by the way, if you guys are, we've been having this conversation earlier, but I want to say that's how much of their reserves right now?
1%, he said.
No,
in 1 day.
Reserves,
good luck.
Their reserves are about $1.3 trillion.
Yeah. Okay. Good luck to them. I've said it before. In my opinion, this is the beginning of the end of this monetary lunacy in Japan. Of course, it's going to take a long time for them, but in my opinion, we've now come to one of the later stages of incredibly stupid monetary policy, which is they're now trying to fight to
their own policy.
Exactly. They're now trying to fight by throwing good money after bad money to, in essence, revert or stall some of the problems their own policy creates, while their own policy supposedly was created to prop up inflation, and inflation is now above their target. And in my opinion, it's not going to be stopping here. It's going to be climbing even further. So in my opinion, we are at the beginning phases of another incredible story that we're going to be reading in the future, like the Bank of England, like the S&P floor, etc. Only in this case, it's going to be a lot more, it's going
to critical.
Yeah.
All right. Well, let's and Steve, appreciate your comments. I'm going to hear more of like more of the mechanics of it right now, just because obviously this is fresh in everybody's mind. Some of us happen to be long yen right now, and somebody who's been on trade desks in Japan, like Kman. I want to hear like about the mechanics of what the BOJ did last night. You'd mentioned something in the ForexAnalytix chat room. Because, you know, when I get up, it's at the 3 o'clock in the morning hour. So I'm like trying to like focus my eyes, have a cup of coffee, try to wrap my head around what had just happened overnight. Fortunately, you know, we were having this conversation again in the chat room, and I'm like, okay, I happen to have some yen exposure. It's not as big as I wish I had, obviously. But I started shorting dollar yen yesterday with really wide stops. Obviously, if you trade the dollar yen or any yen product over the last few months, you had to have very wide stops because of the massive moves. But, you know, so obviously my position just isn't as big as I wish it was. And I'm trying to figure out about adding to it. But you were explaining some of the mechanics of what happened overnight, since you happen to be in front of the computer with Ryan. And I'm sure you guys talked about this on the Flow show. But can you explain to us that are just getting in front of our computers, what in the hell happened overnight?
Yeah, so that's what I said just earlier today. And I said, so first you got the Bank of Japan not moving anything to their monetary policy, keeping YCC in place. That sent dollar yen higher, but we already had some warnings earlier, just like an hour or so before the Bank of Japan by the MOF guys, and then Kanda, who is the senior F.A.C.E diplomat for yen affairs, and they said they had not intervened yet, but there were some clear signs. They probably knew that the Bank of Japan wasn't going to do anything, and so it shot up on the Bank of Japan to 145.75 something. And then they just intervened. They did like 3 rounds of interventions, saying that the moves are erratic, that they clearly saw speculation in the moves, and that they had to try to stop the yen's rot for now. So there were like 3 to 4 rounds, I think, to put it down to 140.5.
Yeah, Cohen, I have a question for you. Do you really believe that the Ministry of Finance is working independently from the BOJ? So it was like, okay, so the BOJ is not going to do something about it. What a surprise. I mean, we have no idea what they're going to be doing since they're independent. So now we have to take things in our hand and we have to do something. Or do you believe that the BOJ is just incapable of doing something for multiple reasons because they've cornered themselves? And since it's, you know, it's one team, in essence, the effort to prop up the yen has to come from the side of the Ministry of Finance. Which of the two you think is happening here?
No, but we have to know that during a lot of Bank of Japan meetings, there is a Ministry of Finance,
of course,
representative there, and I suppose, well, I trust with a near 100% probability that there was one today, and that they just knew what the Bank of Japan was going to do. But the Bank of Japan it's not a trap, but I mean, let's face it, they've been doing MMT since Abe came on, right? So
Yeah, the 3-arrow policy.
Sorry,
the 3-arrow policy of Abe.
Yeah, but no, this is just monetizing the debt, right? Even
yes,
though
exactly.
We are not monetizing the debt, they do, and the government is putting stimulus package after stimulus package into place. So, and what was really funny, well, not really funny, but special this morning as well, is that Kuroda said that they won't likely change forward guidance for the next 2 to 3 years, which is an incredibly long period in the context of what's happening around the globe right now. Yeah, so I think they're clearly monetizing the government's debt, and they might start to tweak a little bit their wording and perhaps let the YCC band go out a little bit, but basically, yeah, it's up to the governments to stop the yen's rot right now. If you ask me if they are going to succeed, I'm doubtful, unless
me too.
Unless the dollar turns around, right? I mean, a lot of people are now saying that the dollar is getting ready for a turnaround. Personally, I'm not yet in that camp. But
we've been hearing that for a while, though.
yeah, and I'm not in that camp, and I've been saying it. I'm not yet in the camp of a dollar turnaround.
But
well,
you better get your backpack on, because you'll be in the camp. I predict within the next 2 to 3 weeks.
I'll be there with you, Dale, when I.
So start hiking. I've got a fire going. Blake is going to bring s'mores, and we're going to all sing Kumbaya.
I'm gonna say something. I'm gonna say something about the BOJ, and I was listening to Brent Donnelly, an interview with him a couple of days ago, and he made some really great points about, well, just keep in mind that the last time that the BOJ did intervene was back in 1998, right?
I can't remember.
Is that correct? Like the big intervention like this?
To sell dollar yen, yeah.
Yes, to sell dollar yen.
Yeah, but that
the last time they sold it was up here in 1998. They were buyers back in the early 2000s. And if you think where they were buying yen and when they were buying dollar yen and selling dollar yen, they're actually really good traders.
Yeah,
they're damn good
turning points.
They are at major turning points.
Yeah.
I remember when they
invented candlesticks.
They did. Matter of fact, not the BOJ, but the Japanese did.
The Japanese,
and also, I remember the RBA and the RBNZ. They were selling aggressively the Aussie dollars when they were intervening, and Kiwi dollars way above parity. Central banks have a very good, ability of turning the markets at important inflection points. Just keep that in mind, guys.
When they coordinate.
Yeah, they're not all turkey.
You may sit there and say, "Oh, well, the bank is
fade them. They're
it's
desperate.
an unforceable. It's a stop that you can't. It's a force you can't. You know what? They're really good at doing what they do.
They will never match the perfection of Gordon Brown selling the UK's gold, though.
Yes,
that will never be matched.
Yeah.
Good morning, everybody.
That's a good reminder.
Blake, I agree on what you say. For as long as coordinated.
I'm sorry, Kman. I couldn't hear you. What'd you say?
I say I agree with you for as long as they coordinate their interventions.
And I mean,
the
FX market is an unstoppable force. I mean, it's the largest market in the world. So central banks, you're right, they have to do some sort of coordination, but they're also good at timing. And I think that you make a really, really great point there.
Aussie may have bottom, Blake.
Well, you know what? Let me go ahead and take some charts, and I'm not gonna give you guys everything because this is a free show. I mean, come on, we gotta reserve some stuff for the ForexAnalytix subscribers. I already sent out a lot of analysis this morning, just early this morning. But let me just put it this way: if you read any of the basic technical analysis last night of all the major currency pairs,
You made money.
Most targets have been hit, and we've reversed. So I'll just leave it at that. But since you brought up the dollar yen,
Good
or the
stuff,
Aussie
Blake.
yen, thank you. Since you brought up the Aussie yen, let's talk about it. So we hit channel support, 161% extension.
Yeah. Right there.
Of the last, this is the last move higher, channel support, and very divergent relative strength. Also, if you take a weekly chart and you look at these points right through here, we're basically probing that. And on top of that, I do most people know this that listen to me, this is what I consider a generational low. In my lifetime and in our lifetimes as currency traders, we should not revisit that level. And a lifetime in a currency trader is approximately 20 years in my book. So in the next 20 years, we should not see this level ever again. So, and if I'm correct in the Aussie, this is a big long-term inverted head and shoulder pattern that is a complex head and shoulder pattern, meaning that we do have, cockeyed, if you will, and diagonal neckline and shoulder points. So this is something I am looking to buy, the Aussie dollar, just since you brought it up, Dale. I am very bullish down here.
I'm sorry.
And no, it's fine. Just give away the farm. Why don't you? I mean,
How about
hey, everybody, just why don't you take ForexAnalytix for free? Actually, you know what? Why don't you guys subscribe to ForexAnalytix?
We'll pay you.
We are going to be raising our prices from $119 per month to $189 per month. First time we've raised our prices in 4 years, and that's going to happen here in the next week and a half. So make sure you guys get out and take advantage of ForexAnalytix, because you'll be grandfathered in at these prices like the people from 6 years ago that are paying less than $119 a month are. So there, I'll just say that. But yeah, the Aussie dollar, I'm very bullish down here. I'm looking to establish some long-term longs. But you know who we haven't heard from yet this morning? We've heard from Quiet Ryan. Where's Ryan? Is he even working today?
He's here.
Just before you move on, then we did about the same thing in cable for you guys, down in the low 112s. A bit of an extension, and
I mean, Kman,
low 112s. It was holding very well as well.
Don't give away the farm, man. Oh, where is Ryan anyway? There he is. Hey, Ryan.
About 5 days worth of work this morning.
You guys must have been running around literally in circles on the flow show. Stelios, did you manage to join the flow show with Ryan and Kman?
I did for most of it, yes.
Okay, so
it was fun.
Yeah, I'm sure you guys had a hell of a time. So, Ryan, why don't you tell us from your point of view what you covered on today's free flow show? And if you guys don't know how to attend to the flow show, this is I'm sure you guys covered all of. I'm going to go ahead and put this link in the chat box for you guys. But what do you?
We have a page as well now.
What did you make out of all of this movement, Ryan?
Well, we spoke about the weather. We spoke about the Polish zloty, Indian rupee cross. That was very important today.
Okay.
But no, we've been waiting for this day to happen for a long while. It's been brewing. You've got two sides now. Those who want to buy the dip and test the MOF, and those who want to sell the rallies to front run further intervention. So it's going to be jumpy. Here we are sitting. Dollar yen's been down to 140.49 as we speak. Now trading 78s. It's going to be a volatile few days, but it's also important to remember, okay, that the MOF, the BOJ, they're not going to be too focused on actual numbers. Is it a coincidence that they waited for the FOMC yesterday, followed by their own meeting? Two significant meetings where the Fed were more hawkish in terms of how high rates may go and how long they may stay up for. And the Bank of Japan, as Kay mentioned, Kuroda turning around and saying they're not going to change policy for 2 to 3 years. That for them injected a load of volatility and why they acted on it. That doesn't mean we can't go back, we can't go to 150 still, but it's all about the volatility. If we spend 6 months going to 150, they probably won't bat an eye. If we start hitting up there 200-300 pips a day, that's when they start jumping in. So it's all about the volatility. We're going to get this volatility for a couple of days probably. Then we need to let things settle down, see where the levels develop. Where is the support, the real support going to come in dollar yen? Where's the real resistance going to be placed by traders? Then we get an idea of the markers of the range. That's what we start to trade. But from here, you know, I'm happy to let it do its thing and see how it comes out the wash.
All right. Okay. Sounds good. Stelios, from your point of view, what are you thinking here?
Well, first of all, yesterday on the chat, I said it when I did it. I got out of the second half of my gold short, 1663. It just feels like the market was trading a lot better than I thought after the Fed. We said yesterday, we thought the Fed's going to give 75 and not change much. They didn't. And, you know, even though they did talk about eventually reducing the pace of the rate hikes, nothing new yet, in my opinion. So nothing has changed substantially, but I think we're getting closer and closer to the point where things will change. So at the moment, I don't see any change in the macro picture, but I'm seeing the markets trading a lot better than I thought they would. That's why I'm taking it a little bit more cautiously now.
Gold took out the longs first, but making a new low, then negated the breakout, took out the shorts and closed, I don't know, kind of mediocre. You know, if you want to see a neutral close, that was it. And they classic of just shakeouts on both sides of the market.
Yeah.
Very, very crazy stuff. So you know, with the dollar yen, I've got to imagine a lot of support's going to be down here at 140. And you know, going to since you're going to have rates moving, precious metals moving. Now, I want to ask you guys this, and let's go around the horn here on this one. Do you think gold hit a low yesterday, and is that it? I do, and I'm gonna jump into that camp immediately. I think gold is bottomed. I'm looking for a break back above 1700, hopefully today. And I think yields have actually peaked as well. So what are you guys' thoughts? Let's start with Steve. What do you think about gold at this point?
It's too early to call it, in my opinion.
Okay, well, I'm gonna stick my dick out there, so I'm calling it. Stelios, what do you think?
I actually, I'm not sure, but I'll tell you this: I've started very slowly. I wrote this on chatroom as well, getting long a little bit of silver, a little bit of platinum. Small positions, just tracker positions from now. But I am getting very itchy to get very, very long. So I'm tending to agree with you, but I'm not sure yet.
All right. Well, that's because you're super conservative. All right. So
I am.
how about you are? All right. How about you, Ryan?
Yeah, I'm still short. 65 on my break stop entry. Technically, while it's holding below this, let's call it 80, 87, 8, 90, whatever. Yeah. I still think there's further downside to come. It couldn't break above over the Fed. That was a big signal. So I think it's further down from here.
Okay. You know, and let's just say, you know, technically is really still like, and what Steve said, I think it is too early to call. I think we're going higher, but I do agree with what you guys are saying. It is too early to call. What do you think, Kman? Are you even paying attention to precious metals?
Yeah, I do. I'm long silver. Nobody.
Oh, you are.
Me,
okay.
But I'm long silver. So.
Then you must have liked the chart of the day that I put in yesterday.
No. To be fair, I used to be Greek, so in my former life. So Stelios, I need to have some silver at least at any stage of my life. You know what I mean?
Got it. Well,
I think there's a case for the precious metals, but I would say
by the strength
as well on a fundamental basis, not only technical basis. But it's for a bad one. But when there's warfare, they need to put those chips in the drones, and unfortunately, and I think silver has a better chance to start to ramp higher than gold right here and now, if it does. Yeah.
I read that many of the open positions on the ETF SLV are like it's 90% short positions. So you have what's going on in the physical market. You know, anyone in the crowd could just go to your bullion shops, big ones nationally, and try and find some US 90% silver or rounds, and they're on back order, or they're out, or maybe they have 20. And there was that, we talked about this a few weeks ago, there was backwardation in the futures market. The squeeze in silver and the move, I think, is just beginning. And
if you look at COMEX inventories at multi-year lows, this is not, well, potential for a squeeze. Let's leave it at that.
Yeah, and I'm really looking above. I mean, this is I know I blogged about it last night, but this is the trend line resistance. Get above 20. I mean, that's a big round number for people. Yeah, I'm sure there's a lot of people out there like, hey, if it gets above 20, I'm a buyer. So anyway, that's
the whites move first. That's why Stel bought platinum too.
Oh, Stel, you bought
there you
platinum?
go. A little bit, yeah.
Wow, look at you. All right. Well, hey, by the way, I want to just give a shout out to Barry. What's up, Barry? Barry's one of the young guns of Wall Street. Well, that was 10 years ago. So you're not so young anymore. Good to see you. Glad you're listening in. And good to have you here. It's been a while. Haven't seen you on social media in at least several years. So good to have you here. Let's talk a little bit about the euro. So what do you guys think? We following that we haven't even talked about the Fed. We've been all talking about the BOJ and the Ministry of Finance and the yen. What do you guys make about the Fed moves? I mean, we only have a few minutes here. Do we have data coming out? We do.
Jobless. That's it.
Little jobless claims. That's it. Okay. So real quick, what do you guys think about the Fed? I mean, steady as she goes. I mean, the hawkish. Market responded hawkishly. I mean, at first you got a little bit of a reversal, but the stock market ended at the lows of the day yesterday. The euro, closed in breakdown territory, which actually today is setting up for a false breakdown, which has to be noted. But what do you guys make of the Fed? Let's start with Steve. What do you think about what the Fed is doing?
Steady as it goes. I mean, Powell, admittedly, which is refreshing, has been quite clear for quite some time. I think he's been communicated for a few months now, at least a couple of months, very clearly the signal. For some reason, the markets, between his statements, decide not to take him on his word. And although there is always an initial reaction to what he says, a few days afterwards, market participants clinch on some kind of hope that, he's going to change his mind a lot faster, and they bid up equities, etc. And then they get disappointed and rinse and repeat. I don't know how many times this has to happen before the markets accelerate lower. Because in my opinion,
but you watch, and I get what you're saying, Steve. You're correct. It's the exact opposite that we dealt with when that we had the Fed. When I remember you and everybody else here saying, hey, the Fed's never going to raise rates again. Ever, right? And it's the same. It's the same thing. And everybody was just hoping they would eventually raise rates, and they never did, to have stocks come down. It's the exact opposite. A year and a half later. So we're in that situation. But at some point, the terminal rate is going to show a sign of a top. And if you're looking at it, right now it's about a little over 4.5%. So nothing.
Yeah, but these numbers keep changing, so don't pay so much attention to it. In my opinion,
it's the trajectory, Steve. That
in my opinion, before we get to what proves to be, in retrospect, then the terminal rate, there is a lot more pain to come.
Okay, that took up most of the last 4 minutes. Stelios, what do you think about the FOMC? What?
I had a dentist named Dr. Hurt.
As I said before, I think the Fed has not given anything new. They're still on the same path. but they are seeing risk assets respond to what they're doing. And I've said before many times, I think at 3,300-ish S&P, that's when the change comes.
Okay, and Ryan, what do you think here?
Pretty much as expected. We've been banging on about it for the last couple of weeks. It was all about the dots. They confirmed some of the market trading a higher terminal rate.
Jobless claims came out, by the way.
Yeah, I know
as expected, non-event.
The question will obviously be, do they reach the terminal rate they're expecting, or does something come out the woodwork to derail that? And that's what we're going to be trading going forward.
Okay, so I want to ask really quick, you know, before Dale, I know you have an interview coming up. Who are you bringing?
A guy that we would hire.
Oh, you're bringing that Adam Button dude.
Yeah,
just, someone Forex Live or something like that.
Yeah, someone, you know,
yeah,
a guy
that actually, you know,
can meet our standards.
Being a little sarcastic here, what a great guy to have on today, breaking down. Dale, you couldn't have timed that one much better. But
it was
let
Providence,
me say this,
man.
Let me say this. All right, you guys, make sure you all stick around for Adam Button from Forex Live. So he'll be breaking down what we're all seeing here. If you guys haven't tried out Forex Analytix, remember it's one. Well, no, we have. Oh, do we still have the $1 for 10 days?
Yes,
try it out
do.
because when our prices go up from 119 to 189, well, that's it. We're not bringing our prices back down because that's just not how it works. So make sure you try it out now. Take advantage of the pricing while you got it. Because if you want to join one of the most active trading communities out there, let me just show you a look around the heartbeat of our community. This is our chat room. This is our general chat room. This is when I got up, which was only about an hour and a half ago. Still going. So I got up right around here. That was at 4:06 a.m. and you can see all the chatting just in the general chat room. That's not the trades room. That's not where we're posting our positions. That's not the Spanish chat room, the Flowonomics room, which is the macro room, the news and research room where we post all the news and research things. This is our community. And if you want to be involved in one of the most active trading communities around, come check us out and be part of it. All right, with that being said, Dale, it is all yours with Mr. Button. Thank you, Ryan. Thank you, Kman. Thank you, Steve. Thank you, Stelios. Thank you, Dale. Thank God. Thank the Academy. You guys have a great day today.
And thank you, Blake, for letting us give away the farm, because we plant good seed, right, bro?
That's right.
All right, so that's why we give. Adam, how are you, bro?
Hey,
How's
Dale.
it going with you?
Adam, welcome, by the way. Great day to have you here, by
Thanks
the way.
for the introduction. Great, Blake.
I mean,
it is a lively day. Oh, man.
Yeah, so, we live for these days, right?
You really do. I mean, that's kind of the time where you don't have really time to catch your breath. You got to rely on experience, and nobody has more than you, Dale. So.
Thanks. Well, Moses did, and Abraham. So anyway, technically, I knew there was unfinished business above 145 in the end.
Well, we talked about that. Was the last time I was on F.A.C.E. I think it was a couple, 2-3 months ago. It was, 1,500 pips lower, and 145 was the number. You put it right in your headline when I was on. So, we did it today, and it didn't last long, but it certainly hit that. I mean, it hit fractions within that earlier this month, but I mean, that's wild. It reminds me back in the S&D days, waking up in the middle of the night for us and then hearing that news.
Were you up for this?
I don't know, my internal clock went off about 15 minutes after it happened, I guess, just dialed into the market, just like the Matrix.
Okay. All right. So you went with the flow when you saw the first intervention starting to come in. How did you approach it? I mean,
no, I didn't go. I didn't trade anything here, man.
You didn't trade. You just watched it. Okay. So, what do you think? Is this major?
I think for me, they're intervening to weaken a currency and intervening to strengthen a currency are two very, very different things. You can weaken your own currency infinitely because you can just keep selling it. You have the currency to sell it. To buy it, you need reserves.
Yeah,
obviously Japan has huge reserves, but there is, you can exhaust your ammo. And so I don't know that they don't mind 144 or 143, right? They were jawboning against it. So my first instinct is to find a spot to buy, not today, not tomorrow, but maybe the day after that, and take it back up. But listen, you're at the whims of someone in Japan, right? And their thinking process and whatever it is they're after. And you don't really know.
Aren't we always at them? But
Well,
the difference is now they're beginning to think. We
I
didn't have to worry about it because they weren't, they were only thinking about doing something.
Right. I mean, and you maybe want to see it twice, maybe get back up to 145 or see what they're doing. I don't know how, if this second leg here lower is them or if it's, people getting cleared out. It's certainly been a very crowded trade. But yeah. I would have thought a lot of those people would have cleared out on when you hit the 145 twice.
No, you know why they didn't? Because, you're talking about people staying long.
Yeah.
Or because I think they had to take out the bears first before this happened, but I don't know.
It's not a bad idea for them. I mean, the timing isn't terrible if they drew it up that way, get that squeeze, and then smash it.
So you're basically viewing this as, because they're not trying to weaken their currency, they're trying to strengthen their currency, that you don't know how far they'd want to go with draining reserves, and that this is going to set up a buying opportunity. Does it have anything to do with, you think that because the yields are going to keep climbing, and that's going to make intervention successful for days at a time, but not turn the tide for months at a time?
And certainly the front end, it was interesting yesterday, and we see it up another 10 basis points today at the front end. And it's going to drive it a little bit more. The back end, you've got to imagine.
I bought bonds.
The bonds
I'm long bonds.
Bonds are a really, really interesting spot to be watching today, because we had the Fed decision yesterday. Yeah, it was volatile. Big inversion. Now real money kind of doesn't come in till, they don't come in after the Fed. They're moving today. So the real money's moving today. They might start buying the long end. And, we're going to get a huge inversion if that's the case, because the Fed's going to push up twos probably even further from here. And if the bids come in, we've kind of gotten through this right now. Okay, now we know where terminal is. And I think I'm getting all over the place here, but I think we know where the top is now. Even if you tell me the next CPI report or the next two CPI reports are a bit above expectations, I still think the Fed's going to pause at 450, 475, somewhere in there. Now, if they're lower, there's a very good chance of that we start to see a bid in bonds, because the next trade is the recession trade.
Right, growth scare. Recession,
that's right.
Yes.
So we're kind of past the rates going up scare. We've seen the top, I think, now. And so if you're looking at bonds, I don't know how you can think it gets better than this, especially if you would have to have a material move up in growth and inflation again to get the Fed thinking about going up above 5. And maybe that happens towards this time next year, but you've got clear sailing for 7-8 months here on bond long. So you're going to get a huge inversion. So that recession trade is on.
Okay.
But
even if it's just a bear market rally from the highs at 156 to 106, that's 50. Why can't it rally back halfway? That would take it back to the breakdown at 131.
Right. And there's a lot there's a tips auction today. So that'll be a spot to watch to get a sense of real money as well. And bonds are, and I guess with equities though, if you get bonds, I don't know, we may have this topping trade going on. Even, what was interesting about the dots to me was I should pull it up, but it's the second dot, the 2023 dots, sorry. The highest ones were at 475 to 450. There were 4 dots there. It means there's nobody around the Fed table arguing that we're going to have to take it above 5. right? So once they get to 450, everybody's happy to wait and see. And everybody believes inflation's coming down. So there are really no hawks left around the table, starting around the turn of the year. Yeah. So now you've sort of seen the top. Yeah, we probably had to ratchet the top up a little bit yesterday, but another 20 basis points or from what was priced in, not that big a deal. So I wonder who steps in here. At the same time, the volatility in the landscape is insane right now. You're dealing with 3 central banks decisions here in 18 hours.
What a great time to be alive.
It is. It is.
So, do you have a view that I would suspect then that you don't think the dollar's peaking out here yet either, right? And there are lower numbers coming for euro and cable yet?
It's a pivotal moment. You look at the dollar charts, I can't remember a time when so many charts were really on the knife's edge. Breaking out to, 30-year lows, 20-year lows, multi-year lows.
Look at the daily here too, Adam. This is the first, I don't have to put my cursor up to see that it's a divergence from the last high that we had in September. So, could that be it? 1.618. I know a lot of people were talking 112. It could happen, but I don't think I want to be pressing alongside of the dollar here.
I wouldn't either. You sort of asking me about that, but I think you can buy dollar yen on that kind of trade. We'll see where they're at, but there's a massive rate differential there. But I don't, by and large, the dollar, it's crowded. But I will make 2 points. If you look at the 2 last big dollar cycles, and even you might remember this one, Dale, in the 70s, Plaza Accord, that was the dollar cycle. Right. And it didn't end till the Plaza Accord. And then if you look at the 90s, massive dollar bull market again, and it didn't end until there was intervention in 2000. You had the .com bust, September 11th, all that. But it didn't end with that out-coordinated intervention there. And now it took, 8 months or something after intervention in 2000 for it to top. And this looks like the biggest dollar bull market since then. And if you think about the dollar, it has this place in the financial system and in everybody's mind around the world that once it gets going, it creates its own momentum because it's the dollar. And now there's this safety trade, right? The yen's out of the safety trade. The Swiss franc's mostly out of the safety trade. The Europe is in a bad shape. China has uncertainty more than it's had in 20 years. Yeah. There's war in Europe. Emerging markets are a mess of inflation. So, there's this really
the world would be served with a weaker dollar.
Well, but the impetus is to buy it, right? You have all these people in all these places saying, boy, I should have more dollars. I should have more dollars. And things might not be great in America or wherever else, but they're better than really almost anywhere else. So you have the safe haven flows, you have growth flows, you have rate differentials, you have momentum, and you have the emerging market bid. So what's going to stop that? And I think, there's probably a tradable high in the dollar here now, but we may get to a point, and maybe the Bank of Japan's there now, but where we see some other currencies and we do get that coordinated intervention. Now, what would have to happen? Probably cable parity, something like that. The euro another 10 cents lower along those same lines. Yeah. So that is kind of what I'm thinking about right now. I don't think we're there, and I don't think that's the trade right now. But how does this dollar bull market really end? I don't think it ends on its own weight. I don't think it ends on rate differentials.
Yeah, it's going to end with intervention, like a Plaza Accord.
It could be something like that.
I talked to Shy Girl, and they said that they were checking facilities. I talked to her last week. They were testing the U.S. testing.
And I don't know if that happens until America wants it to happen either. And I just don't think we're at that point yet either. But corporate earnings, they might start to turn here pretty badly.
The S&P's under the trend. I have a hard time. That's going to be the question. Do you think that a bond market rally is going to be supportive of risk, or it happens because of risk off?
I mean, sentiment is terrible here right now. A couple things. This is the single worst week of the year seasonally for equities in the worst month. So, it feels like sentiment is really terrible right now.
Oh, it is.
But, the thing about implosions is they happen when sentiment is terrible. So we could be at that point where it just gets disorderly from here, where the market says, listen, these morons at the Fed are going to hike us into a recession. I'm getting out of here. I can see that trade unfolding, especially when I can buy bonds. But I can also see the money flowing into bonds and equities saying, you know what, growth's still okay. Unemployment's at 3%, jobless claims at 216 today. And I'll buy risk. Like the economy, it's still hard to get to that place where you're saying this is a terrible recession coming, because just not enough data there yet. Okay. But
we need some of the backward data to start, like the unemployment rate to go up, and all the things that we look at, leading economic indicators and all these things say we're already in a recession.
I mean, I think a lot of that though, it's strange, right? Because you're coming out of a manufacturing boom that was artificial, and I think you normalize a bit of that. You see something like manufacturing throw off recessionary signals because it kind of is in manufacturing, because it was operating at 120% of capacity. You bring it back to 100%. And it's a slowdown, but is that indicative of the bigger economy or indicative of something happened in the pandemic? I'd say it's the latter. So I don't really trust all those signals, but again, the Fed is the signal. And I don't know if we can handle these rates. So,
well, what's going to like it if rates are, getting close to a top. And actually, you and I talked about silver, and it looks like we're coming out of this flag. And even when gold broke down, which is now a false breakdown, right? This was a big breakdown, and people, I did a little dissertation yesterday, Adam, where I said, oh yeah, Mr. Market, it's so nice, you missed the breakdown, but he gave you 2 chances here, and said, oh, you're a little bit slow, I know you've only been trading for 2 years, so I'll let you in here and try it again at the breakdown. And you know what? I'll even let you get short right before the Fed. Now, I'm not saying that scalps didn't work there, but the fact that we're doing this today. So the narrative, if the yen has peaked, metals look good and bonds look good. So, I think they're all kind of connected, don't you?
Well, it's okay. 2 things. This might be the dollar top, right? We talk about big intervention. Maybe that doesn't stop it, but Japan is intervening. I do see a case for buying bonds. We may be seeing the top in rates. And we all agree it's wildly crowded and overbought trade. So whether it's a short-term or a long-term top, great. Number 2, I look out on the horizon and the only thing I can see is government deficits.
Yeah.
This energy crisis in Europe is going to be stratospherically expensive. UK, we talked about it before, is taking on all the financial risk for consumers, half the bills for energy, which I don't think is enough. But then they can't pay for it. And the same thing is slowly unfolding in Europe. Now, when you listen to some of the European leaders, they say, listen, we're going to take care of it. We're going to take a lot of the hit. Consumers have to, save a little bit of energy as well. Sure. And businesses are going to suffer a bit. Fine. But that's just the first phase. So we get through this year, we get through the next year, the year after. What's the spending coming behind that? Massive green investment, deficit fueled. I mean, Germany's talking about a hydrogen economy. The numbers on hydrogen don't make any sense with the technology we have now. It's impossible to transport. The energy costs are insane. I mean, the spending that they're going to do in Europe, a debt crisis is inevitable. And you see in the US, there's no real fiscal hawks anymore. We didn't have it in the last administration, don't have it in this administration. The solution to every problem is to spend more money. And, at some point, right? It's like a broken record because people have been saying this forever, but boy, those costs get pretty high. And, that's when all those roads lead back to precious metals. And just commodities in general, which we're coming back to, I think, an era of commodity strength, which is just broad currency debasement, right? It's the same thing.
Right. Well, every bull market in silver was accompanied by a bear market in the dollar. So, maybe silver turning before the dollar. So it's very possible. We're talking right now.
I want to ask you, you're a silver bull. I mean, I'm not that big a silver bull or a gold bull right now, but the crypto trade has kind of come undone here, right?
Yeah.
And I believe that was competing for dollars with precious metals in 2020, 2021 in a big way. I just struggle to see crypto regaining the enthusiasm. Now, price has a funny way of changing that when it's a bull market, but boy, there are a lot of detractors now, and a lot of it's the use case, right? We still come back to saying, well, what's the use case in a lot of these that hasn't been exploited? So, Ethereum, the merge was a bust, huge sell to fact.
Yeah, right here.
That to me is where they can both do well, I think, in a debasement kind of scenario, but it would do a lot better. I mean, we would have gotten gold another $500 higher, if not money sucked it into crypto in the last cycle there. So,
I want to touch on something that's even bigger picture, and I don't know if you're starting to think about it, but I am now, President Biden signed an executive order to move forward on central bank digital currency. And, I think that this is the biggest financial story since Nixon closed the gold window. I'm curious why it's not being covered, why people aren't asking about how it's proceeding, and talk about how abuse of power could come with a digital currency like this.
Isn't it'll be the great irony of crypto. I've written about this before, is that it starts out as this sort of way to liberate yourself from money and the government control.
That's why they let people get accustomed to cryptocurrency.
And then it gets turned on its head. They track every transaction. I mean, there are some benefits to knowing every transaction, in a macro perspective, it's much easier to manage the economy, inflation, that kind of thing. Obviously, that's not the kind of, I think, the trade-off that we want to make, but I don't know if we're going to end up with a choice. I mean, the erosion in privacy is
gone.
It's absolutely. I mean, China, they've used COVID for it, obviously, here now, and power. That's what power does anywhere. It tries to get more power, and it's the aim of power. And so here we are. Here, I don't know though if it's on a 100-year timeline or a 10-year timeline.
Yeah, you have any idea when I'm hearing people say that it's only but 2-3 years away from
the digital currency, but I don't think it becomes as it sort of creeps in the insidious ways that you're talking about. But I don't have a trade on that.
No, I know there's no trade except physical metals.
Stay out of jail.
Yeah. So anyway, okay. I just brought it up to see if you had any thoughts.
Yeah. Physical metals do kind of look. Yeah. I mean that you're on the right track. I think everybody can feel it, but I don't know if anybody's doing it.
You know what else is interesting about yesterday? You know what it was yesterday? And I'll tip my hat to Mr. W.D. Gann. It was the first day of fall. And Gann says, look for market reversals going into a change of season. That along with a change of season can come a change of direction. And to him, the time windows were the more important part than price action. So
it's a good spot for a bounce for a lot of reasons. I think the big trade, I made fun of natural gas traders forever. I mean, I've been long gas for a while here, but not trading it because the volatility is insane and it's a trade on the weather. And nobody knows the weather.
It's a great arbitrage with Europe if you buy it here.
So the trade now, we're all on the weather trade now. So everybody's on the natural gas trade in Europe because if it's a cold winter, that's all she wrote for the economy in Europe. And that's going to suck down everything. And I wonder, and I really believe that a lot of the excess demand in the US is going to be soaked up by Europe. You know, if you're a factory in Europe that's still operating, has electricity,
Yeah.
Your export market is going to be the US. You want those dollars bad. I mean, and if your domestic market's soft, you're not going to have a problem delivering the product. Shipping certainly improved. So I think, you know, they soak up a lot of that excess demand in the US and bring inflation down, but it doesn't help Europe much.
You know, with your take on commodities in general, Adam, and we didn't even cover WTI, I have to ask you, look at this candle in Aussie. So if we are getting a dollar turn and you're a believer in commodities, unlike the euro, which, you know, took out COVID, you know, COVID lows.
Right. Still a long ways there in Aussie.
Yeah. I mean, you know, Aussie putting in a reversal day down here around 65.5 cents. Would you be interested in accumulating commodity currencies? And, you know, that means, you know, eventually the loonie even peaking up here, still pretty far away from its COVID high as well. So, you know, never.
I'm certain it's going to be the trade of the decade in commodities, particularly after about 2024. You know, commodity currencies, provided they build the mines and attract the investment, will be a great place to be. You know, Australia has that leverage towards China. Canada.
Will they reopen, Adam? You know, they were talking about buying F.A.C.E, and you're one of the first ones that talked about being worried about China a year ago, before they went into lockdown. Do you think they're going to try something else after this council?
I think and I think a lot of narratives are hanging on that. We talked about it before, and it's sort of this hope that they would do it. You start to look out now and you think, boy, they should be planting some seeds right now for that turn. Xi looks pretty secure.
Yeah.
You know, either they're going to come out and announce it in one day. I don't think that's really the Chinese way. So maybe it happens in a whole bunch of steps and happens maybe next summer is starting to look optimistic or probable. So I think a little bit of the anxiety we see in stocks and the global economy is saying, you know what, it doesn't look like it's coming anytime this year in China. We are starting to see some steps though, right? Those lockdowns ended a lot quicker. You know, maybe they just take down the testing a little bit. I don't know how many steps you need to take though to go from where they were to where the United States and most of the world is right now, in a kind of Chinese way.
Yeah, time for a reopening. They move like the tortoise. So WTI, you know, the support level at 80, I wouldn't be short down here.
So seasonally, you know, there's just everything kind of lines up in this oil trade. Seasonally, it's not great right now. We talked about that before. So September, October, November, pretty weak. We all know what happens in November. Not only do you have the midterms, which is why they're desperate to keep oil prices low in the US. You also have the end of the seasonal trend. You have a Russia oil ban in Europe going in on December 3rd. The shipping ban, they're aiming to do it at the same time, or shipping ban, or trying to put, you know, impose $50 oil. And then the seasonals turn. So, you know, I'm not in a big rush here to get long oil because I think it's going to be great trade. And secondly, this is the time of year right now when oil companies set budgets for next year. I think if you had $100 oil, $110 oil, they'd be drilling a bit more. Now they're all saying we're not drilling anymore. So you just set up a bigger bull market. And I think the White House remember the White House said we're going to maybe we'll fill the SPR at 80. Yeah. That was the signal. They're trying to say, hey, don't stop drilling. Yeah. But the market they're still saying, you know what, we don't trust you. And we don't, you know, you just talk. You'd love to have lower gas prices. Nobody knows the future. But I think, you know, by doing all this to win the midterms, they might be setting themselves up for a lot more pain in 2024 when you can't really pull the SPR lever again and you're materially undersupplied in oil. And it looks like that'll be the time the economy should be picking up again if 2023 is soft. Rate hikes are probably late 2023. 2024 should be a pretty strong economy, strong oil demand. So a real nice trade is setting up in oil.
Yeah, it sounds like you're looking for new highs. I think we have at least some type of pop above 100 again.
Yeah.
So 104,
This
maybe
next,
110.
just depending on how this growth scare goes. But
Yeah.
it's holding up better than a lot of things oil right now, but you still get some brutal volatility both ways. So I don't know if it's an oil trade or I like the oil companies a lot better than oil.
Well, you know, the Silver Baron, Dale Pinkert, really enjoyed talking to you today. You know, it matches my hair, Adam. What can I say? You know,
still trying to get my head around all this. You know, the Bank of England,
we've
50,
got it. Yeah, we've
Fed.
got a long weekend, and you know, really key statement about intervention being more effective if you want to weaken your currency than strengthen it.
It's
Great
tough.
takeaway on that, and always appreciate you edifying our community, Adam. And you know, I love talking to you. Well,
thanks, Dale. I think, you know, if we've talked on a few turning point days, and you know,
Yeah.
I'm hopeful this is one, because I don't want to see the global economy in a bad spot. So we'll see. Today would be a good day for markets to make a stand if they're going to.
I'd love to see a bear market in the dollar.
Well, I mean, the Bank of Japan would agree with you.
Yeah,
a lot of people in Tokyo on your side.
Yeah, so you know, there's you know, anyway, high old silver.
All right.
Do you think I have a bias about? Am I acting like a rookie? Oh, yay, silver is up today. I'll do a cartwheel. Oh, silver selling off today. I'll go fetal. Anyway, it's fun after all these years of watching silver, and I, you know, take it back to the late 70s when, you know, they were trading silver coin bags and the Hunt brothers, and this is the most bullish I've been in the metals in many years. So wonderful. We'll see. Really appreciate your outlook on things here, Adam, and look forward to talking to you. Have a great fall trading season, and everybody check out the great work that Adam and his team do at Forex Live, and follow them on Twitter at Forex Live, or Adam individually at FX_button. Thank you, my trading warrior brother.
Right. Oh, yeah, sure. All stuff. I see a lot of talk in the chat here, so I'll hop in there for a second if anyone has any questions, and then get on with this crazy day.
All right. Thank you, Adam.
Cheers.
Have a great weekend. All right, buddy. Let's kick ass this fall. And everyone, you could join the team in 13 minutes for the morning edge. We laid it all on the court, bringing great guys like Adam for you guys. Thanks for sticking around. I know you learned some things from everyone this week. So have a great weekend. Remember, don't just count your pips, count your blessings, and hope to do it all again next week. Adios.